Good evening, guys. Can you hear me clearly? Let's know if you can hear me clearly so that we can get started immediately. Let me know if you can hear me, and let's get started immediately. Good evening, guys. This is day 5. This is day 5. Good evening, guys. Good evening. Alright, beautiful. Good evening, guys. You're welcome back to the live session, the bootcamp. This is day 5 of the bootcamp, and we're going to be rounding up tomorrow. So we're going to finish up all the strategy we are talking about today, and by tomorrow we're just going to do it together with live session, just to make explanation about what we've been talking so far. If you're new to this channel, you're welcome to this channel, and on this channel I teach strategies on how to trade synthetic indices, even if you're a beginner. So do not forget to hit the subscribe button, and also if you've not subscribed, please do that right now so that you can get all the information I am going to be passing. Then you can also check the description to join our Telegram channel if you are yet to join. There we give a lot of tips and you get information about synthetic indices as soon as possible. So let's go straight into today's lecture, guys. I'm excited to be here again. So today we're going to be talking about entries and exit levels. Yesterday we were talking about POI. I was almost done before the app we were using went off. So we're just going to start on entries and exit areas today. Yesterday we were almost done. We were just about going into questions. So I believe that what I passed through yesterday, or what I explained yesterday, you are able to understand it. King Ayokunle, you are welcome. You are new here. Do not forget to subscribe on this channel. So let's go straight into entries and all of that. If you are having issues with entries, just drop a comment that you have issues with entry, and drop the exact issues you think you are having with entry. Now, most traders have issues with entries because of time frame. They get confused about time frame most often. That is the issue of a lot of traders. If you are having issues with your if you are having issues with your entries, the first thing you want to check is the time frame that you are using for your confirmation. Now, also another thing that can that can make you have entry issues is when you do not have a pattern. I think I've always been saying this on my live session on Saturdays. If you do not have a pattern you are trading with, you will definitely have an issues with entry. So you need to get a specific pattern that you want to use as confirmation when market gets to a specific POI. I have a rule and I write it all over my journal. A point of interest is only a reaction zone until market gives you confirmation. A point of interest is only a reaction zone until you get a confirmation from the market, and that is what we're going to be talking about. Now, if you've made your analysis on 24 hours time frame, you've gone to 24 hours time frame, and then you've made your analysis, you've marked out your structure just the way we explained, you've marked out everything, you've marked out your structure, you've marked out your liquidity, and you've marked out your point of interest, the next thing you want to see is a confirmation on lower time frame. If I am making analysis or preparing a setup on higher time frame, like the 24 hours time frame, the 4 hours time frame, what I will do is I'll go to lower time frame to get my entry, so that I can get smaller stop loss. The lower the time frame, the smaller the stop loss, but the lower the time frame, the more problem you have. That is the rule. Because if you are going to lower time frame, like 1 minute time frame, 2 minutes time frame, you get confused easily, you get pushed out easily, because market gives us series of fake break of structure. So the lower the time frame, the lower the stop loss, but the more the problem. That's my rule. Okay, so you have to know how to shuffle in between these time frames. Now, another thing I believe about getting your entries right is the fact that when you say you are making analysis on 4 hours time frame, and you mark out your point of interest on the mid time frame, maybe 4 hours time frame or 8 hours time frame, and you want to get your entry on 15 minutes time frame, if you are not seeing your entry on the 15 minutes time frame, what will you do? What's the next step? What do you think the next step is? If you are confused about that, you would always have issues with your entries. So we're going to talk about time frame first for our entries here. We're going to talk about time frame first. So we have 3 types of time frame. We have the higher time frame, we have the mid time frame, and we have the lower time frame. For the higher time frame, it is classified as our monthly time frame, our weekly time frame, our daily time frame. The last area I classify as my, or the last time frame I classify as my higher time frame is my daily time frame. 8 hours is no longer my higher time frame. It is no longer my higher time frame. So 24 hours is my higher time frame. That is the list of my higher time frame. You can check for weekly time frame, you can check for monthly time frame. Even if you are an intraday trader, it is not bad for you to go on these time frames. When I analyze currency pairs personally, I always love to go as high as 3 months, so that I can see what market has been doing and what it is currently doing, areas of reactions and all of that. So even if you are an intraday trader, even if you are a scalper, you need to pick one higher time frame to know exactly what you're looking for. Now we have the mid time frame. The mid time frame is for refinement and you know, to mark out everything you are expected to mark out. That is what the mid time frame is for. And our mid time frame includes the 8 hours time frame, 4 hours time frame, 2 hours time frame. 1 hour time frame is no longer my mid time frame. It is now a lower time frame for me. For my lower time frame, we have the 1 hour, we have the 30 minutes, 15 minutes, we have the 5 minutes, we have the 3 minutes, we have the 2 minutes. In fact, we have the 1 minute. It depends on the one you are willing to go for, or the one you are willing to get your entry from. So if you are a swing trader, as much as you are analyzing on your higher time frame, where you should be getting your entry confirmation from is from your 1 hour time frame. And if you are not getting exactly what 1 hour is saying, or 1 hour is not giving you exactly what you want to see, check the next closest time frame, 30 minutes or 2 hours. That is a secret I am giving you guys. If 1 hour is not giving you exactly what you want to see, check 30 minutes, check 2 hours. If those two are not giving you what you want to see, stay off the market. That is the rule. If you are not seeing it on that 1 hour you are expected to get your entry confirmation from, check the closest hours or the closest minutes. You can check the 30 minutes, you can check the 2 hours time frame. Once you see what you are getting on any of this time frame, then you can be so sure, or you can be assured that you can pull the trigger. But if you are not seeing any of this, do not enter the market. Stay off the market. If not, you get hot. So what does our entry confirmation looks like? Now we discussed about point of interest. So If I am making an analysis right now and let's say volatility 10, volatility 10, okay, that is what we have on right now, and we have a break of structure to the upside. Now I want you to take a close look at this. This is a break of structure on 24 hours time frame. Break of structure, and I'm marking this place out as a point of interest. If I am marking that out as a point of interest, now your entry confirmation comes in different things. You have to look for different confluences to bring in your confirmation. The number one confluence I look out for is, how did market get into my point of interest? Was it struggling? Was it impulsively? That is going to help me to determine what I am looking out for, because if it is impulsively, most often you will not get an entry confirmation even if market would use that POI. Now let me repeat what I said again. If market gets into your point of interest impulsively and you want to get an entry confirmation, most times you are not going to get that entry confirmation because market did not create a low, a high. So it is not going to break any low or give us any change of character. It is just going to move out impulsively too. The way it's gotten impulsively is the way it will move out impulsively. Now in that kind of case, what do you expect, or what are you expected to do? In that kind of scenario, sometimes I stay off the market and sometimes I enter aggressively. And that is after telling myself how much I am willing to risk in that aggressive entry. In that aggressive entry, if I already tell myself this is the amount I am willing to risk, that is when you see me enter. If I am entering at this area, or I just think market should use this area for sell continuation, and I'm putting my stop loss above. If I am putting my stop loss above and my take profit below, I would enter that aggressive entry sometimes, but that is after I have determined how much I am willing to risk and if that entry is worth it. The way you know that an entry is worth it is that you are risking small to gain more. And after that risk, if you are taking out, you are out of the market. Let's take for instance, you are risking maybe 1 to gain 4. It is still okay. But if you are risking 1 to gain 2, sometimes it doesn't make sense, especially in aggressive entry. And that is why sometimes it is very okay for you to stay extremely patient to get your low stop loss. Okay, so when market moves into your entry, into your point of interest aggressively, sometimes you do not get a confirmation from moving out. It will move out aggressively. That is the number one confluence that I look out for in the market. Did market get into this place impulsively or slowly? Now, if the market gets in slowly, this is my point of interest, then I'll go to 1 hour time frame or 30 minutes time frame. So I can go to 1 hour time frame just for me to be able to confirm my entry. That is if I have, looked at my mid time frame for every other refinement I want to do. So let's look at mid time frame and just do a little bit refinement and see what we are expecting market to do. So I'll use 4 hours in this scenario. So I want to do my refinements because this point of interest is really big. So we have an interest candle here. So I'll mark from this interest candle above. That's my refinement. Have we gotten there? Yes, we have. Now, if you check your 1 hour time frame, let's see the 1 hour time frame. How do you get an entry confirmation here? I have a pattern I follow. Remember what I said earlier, that if you're having issues with your entries, either you are not correct with your time frame or you do not have a pattern that you are looking out for. I have different patterns I look out for, but I'm going to talk about just one here. If you remember when we spoke about change of character, when we were talking about market structure, we said when market gives us a change of character at a good PO high, we classify it as market trying to make that continuation to the downside. But look at what we had here. Number one, it is very obvious that we are moving into this POI impulsively. So anything can happen. But this is what I am waiting for. I want to mark out something for you. We had a high, a low, a high. Market came back to take this low. Market came back to take this low, which is a change of character for us. But remember, we are moving impulsively, and sometimes market would dip back into our point of interest. So this is what I am expecting. If our market does something like this and give me a break again, then I will look for a continuation to the downside. Or market does something like this, give me a break of this high, give me a break of this high, then come back to break this low. Then I'm going to look for my entry area at a POI here. I'm going to wait for market to come back here and do what? Make that continuation to the downside. That is my entry confirmation. Now you can see that it is a combination of market structure, liquidity, and even the point of interest that we are talking about. That is, our entry confirmation is a combination of all of these things joined together. Do you understand? It is a combination of all of these things joined together, and all you just have to do is wait till we have a change of character at that PO high, or market comes back to break a strong low, or you see a continuation. Now, in this kind of trade or in this kind of setup, I would love to join the continuation move. The reason I said I would love to join the continuation move is that if you check our 24 hours time frame, let's go back there. We are coming in impulsively. I can't really tell if this PO high is going to hold, because this impulse to the upside is so strong that market can just do some retracement to the downside and still continue the buy. So even if I am going to sell at this PO high, I want to see something like this on lower time frame. I want to show you something on 1 hour time frame. I want to see something like this. Market breaks this high, come back to take this low, which I cannot so much assure yet if market is going to continue the sell from there based on the impulse that is happening on 24 hours time frame. Do you understand now? Because that's an extra confluence for you. So if we have this break, I would love to join the continuation move where market pulls to the downside, showing us the intention that sellers are now in control. When we have the intention that sellers are now in control, we now start analyzing what the market is currently doing. Come back here to take liquidity, join the continuation move. And that is it for me. Do you understand? Sometimes you might not be that patient. That's not a lie. You might not be that patient to wait for market to do some of these things. That is why you need the right psychology in place. Because some people, you are going to enter a sell here. You are going to enter a sell here and it will start buying. Sniper to the wrong side. Right? So you just have to patiently wait and get your psychology right, and always get the amount you are willing to risk. Let me put this as a disclaimer. Whenever you are making your analysis or your setup, the key to having a stable emotional state is having how much you are willing to risk. Get how much you are willing to risk from the market. When you get how much you are willing to risk from the market, it is going to give you emotional stability. You will get emotionally stable and you are not going to panic. In as much as it is not anyone's joy to see your money going right in your presence, it is not anybody's joy. But when you get how much you are willing to risk, in fact, that is the greatest entry confirmation I can give to you. As much as we are talking about entries, about pattern, time frame, and all of those things, it is still essential that you get the amount you are willing to risk. That is your greatest entry confirmation. So this is it, guys. I want you to drop a comment, ask your questions. Tomorrow we are going to start analysis on everything we've spoken about so far. We're going to make analysis on them, and you're going to see all this putting together in place. Remember, tomorrow, which is Saturday, is always our live session. So we are going to do this early in the morning because that is our live session time. We're going to do the class early tomorrow morning. So come by 9 a.m. Let us do the putting all together, make some analysis together, do all of these things, putting all together, so that you can know how to put all of these things on your chart when you are making analysis. So if you have a question, drop it in the comment section. I'm going to wait and start answering your questions, guys. And also, if you want to join my mentorship, I've had people ask about the mentorship on this live session. If you want to join the mentorship is officially out. You can check my Telegram channel to get all the details that you need. So I'm going to be waiting to answer your questions, guys. So let's ask questions. Let's take questions. Okay, analysis on 1 minute. I'm not going to make analysis on 1 minute. The reason is because I do not want you, even as a beginner or even as an intermediate trader, to make analysis on 1 minute. No. Don't make analysis on 1 minute. Or anyway, if it aligns with your own strategy, that is fine. But for my own strategy, I'm not going to advise that you make analysis on 1 minute time frame. Your 1 minute time frame can be used as placing your stop loss. Now, let me tell you something I forgot to explain in this video. And I know some people will ask, where should you put your stop loss and take profit, right? Now, when you have a change of character, let me give you something like this. When you have a change of character to the downside, and you already see a PO high to enter around here, you already see a PO high to enter around here. If you enter here, your stop loss should be on the highest high. The highest high that gave you before that change of character, or the lowest low. Maybe we are in an uptrend, yes, because this is going to be a downtrend formation. If we are in an uptrend, your stop loss is going to be the lowest low, while a downtrend, your stop loss is going to be the highest high. And that is why I am not going to advise you to be entering at somewhere like this. Immediately market gives you change of character, you're already entering the market and you are putting your stop loss in an unknown place. You don't even know where you are putting your stop loss. You don't even know why you are putting it there. Don't do that. Don't even try it. Okay? It is emotional instability. Where you are expected to put your stop loss is this high, because we are not expecting that after change of character, market will come back to take this low. We are not expecting that. Do you understand? So you want to cut your risk to be as small as possible. That was why I said the lower the time frame, the lower the stop loss. However, it is risky. The lower the time frame, the more problems you have. Do you understand? So when you get this, just get an entry around there, put your stop loss, then your take profit should be on your closest external, somewhere like this. This is almost 1:3, or an inducement you are expecting markets to take. That's 1:3, and you are good to go. Okay, so okay, we spoke about yesterday's POI. I explained everything. The next thing that was supposed to happen yesterday was questions. What was supposed to happen yesterday was questions, and that was why I just said, okay, no problem. Today we are going to ask the questions that you could not ask yesterday. Are we still going to do? Okay. How can you analyze on 1 minute? Your 1 minute is also the same analysis that I am making here. But just like I told you, you have to be careful with 1 minute. Just the same way I am explaining here is the same thing you are going to see on 1 minute. On every time frame, this is the same thing you are looking for. Do you understand? Do we trade according to external structure or internal structure? I'm trying to understand what you are saying. Can the person's account balance and emotions handle such SL? That was why I said you can go on 15 minutes time frame, get your stop loss, get your entry from there. You don't necessarily have to use 1 hour to get your entry confirmation. Personally, if I get my entry confirmation at around this place, and this area market is giving me something unique, and I am not expecting market to come back and break this high, of course my stop loss is going to be lower. I could just put my entry here. Maybe market has given me an area for continuation here, and my stop loss above this high. If I don't see any reason market has to come back up here, then my take profit at this low. That's 1:4, which is okay. Do you understand? So it doesn't necessarily have to be on the 1 hour you are marking out your entry confirmation. You can check 15 minutes, you can check 5 minutes. Use all of those time frames to put your stop loss, and you are good to go. And also risk based on how much you are willing to risk. VIX 150 and 250 years, no more on trading view. Really? Let me check that. Let's check that. That's true. I don't know why, but that is the real problem. You can make your analysis on your MT5. I don't know why they removed it. Wow. Perhaps they want to remove it on MetaTrader 5. The Reef can remove and add any asset at any time they want. So you just have to get your own personal psychology right. Okay. Yes, the $40 monthly is just for signals. What's the best risk to reward ratio you will say a beginner should focus on? I would say 1:5. 1:3, not 1:5. I would say 1:3. That's what I work with most often. 1:3. 1:3. So what's the best? Okay, your trade model, is it solely for synthetic? No, it is not solely for synthetic. My trading model is not solely for synthetic. You can use it on crypto, you can use it on currency pairs, you can use it on any financial asset. Okay, so the next question. Yesterday when you spoke about POI, you said another block was mitigated and you moved to the next other block for entry. but you didn't say if we could enter from the next PO high. Now, if you have an unmitigated point of interest, you can enter from that area when market gives you a confirmation. So it makes a lot of sense for you to mark out that area. Do you understand? So let's see the next question. When is the best to break even? Thanks for the lesson. Now, the best time for you to break even, let's take for instance you are targeting 1:3 and market already gives you 1:2. You can break even at that point. You can break even because you don't want to lose all the profits that market has given you. If market has given you 1:2 and your target is 1:3, break even. If your target is 1:10 and market gives you 1:3, 1:4, break even. You are good to go. One of my instructors called synthetic naira bet. What's your take? Anybody can say anything about any asset if they don't know about it. So that's their own personal conviction. You have to get your own personal conviction to do whatever you want to do. You definitely do not want to follow what everybody is saying. In fact, if you are not comfortable with synthetic indices, I cannot force you. It is your own. That's your own conviction. So you have to get your own conviction, and necessarily other people's opinion do not matter. Do you understand? How true is this time frame? Daily time frame equal to 4 hours. Okay, I made mention of this time frame issue earlier. I said when it comes to time frame, you need to be able to shuffle in between those time frames. Okay, you need to be able to look at daily, look at mid time frame. Like I said, it is classified into 3 aspects. We have higher time frame, we have mid time frame, we have lower time frame. So higher time frame is where you are marking out the necessary things you should mark out. So you can pick any of those time frames to use for yourself. Why are they not prop firm or synthetic indices? Honestly, I cannot say. There are some that are out there, but I've not tried any that works perfectly. I've not tried any that is okay. So I can't really say. So it is still preferable for you to fund your money for synthetic indices other than looking for the one that will not pay you. Okay, sometimes when I break even, the market can come to the back there before making a continuation to the direction. What should be done? Now, when you place break even and market comes back to hit your break even before making a continuation, it requires enough emotional intelligence for you to deal with that and not jump into the market. Now, it is very normal for market to come back and eat you out at break even, not losing, not gaining, than going back to hit your stop loss and it will still not go in your direction, or going back to hit your stop loss before moving in your direction. So break even is just a way of securing your or protecting your capital. Let me put it that way. It's a way of protecting your capital. And in everything that you do in trading, ensure that your capital protection comes first. I'm finding it difficult to erase my forex knowledge. Of forex, I like your strategy, but it is okay for you to want to unlearn and relearn. However, take your time. It won't just go easily. It will not just go easily, and everything I am saying is not going to digest at once. That is why sometimes you need to watch it over and over again. Now, for you to erase old habits, you need to incorporate the new habits and continually hear it, listen to it, understand what is being said. That way it is growth. You are not trying to force out the previous knowledge. So it is growth that will erase the previous knowledge, not because you want to sit down and erase it. No, you need to grow. Do you understand? So if there's anything you want to learn, any strategy you want to learn, all you just have to do is start learning the strategy without thinking about the previous ones that you have, and you will see that it easily gets to erase by itself if it is not working for you. You're welcome, Oluwadamisi. You cannot avoid missing entries. You cannot avoid it. Sometimes it just comes that way, and it teaches you of what else you are supposed to look at in the next analysis that you are making. So you cannot avoid it. It is just like something normal that market can do. You cannot predict what the market can do. So that is why it is necessary that you just adjust to what market is doing. You cannot avoid it, but you can learn how to deal with it. There's no cheat codes to grow your account. It is knowledge that will grow your account and your emotional intelligence. That is it. All right, guys, if we do not have any question again, then we've come to the end of the boot camp. By tomorrow, we're going to finish up everything. Honestly, I do not want to leave you guys because you guys have a way of complimenting what I am doing and appreciating it. I really love that, guys. Thank you so much. Thank you for being on this channel. Thank you for showing up. And I want to assure you that it might not make sense now. Whatever you are doing on the market might not make sense now. But I can assure you that with consistency and the right knowledge, you are going to hit the way. It might not look like it now, but I can assure you that one day you will look back and say, thank God I embarked on this journey. So do not give up. This is not even the time to give up. You've gone too far to give up. So do not even try to think about giving up. That is not for you. I am trying to see a question. Okay. Another entry model. I'm sorry, I cannot, but these ones I've given you works perfectly well. Guys, you are a born fighter. Do not stop fighting. Do not stop showing up. Do not stop being consistent. Do not stop. Do not stop. It is going to make sense one day. Thank you so much for showing up. I'm going to see you guys tomorrow, which is going to be our live analysis, which is where we are going to be rounding up our bootcamp finally. I love you guys, and I'm going to see you guys tomorrow. Bye, guys. All right, let me answer this question before I go. How do you do with series of loss in a row? Yeah, it happens. It happens. And what you just have to do is calm down, get your head straight. You come first before money comes. You need to get your head straight first. You need to get yourself. You need to discover yourself, because This trading thing that we are doing is more about self-discovery. I can assure you that it is more about self-discovery. So if you are facing losses on a roll, you have to sit down, and if you see that it is constantly happening, you have to sit down, stop trading, discover yourself, know exactly what you are trying to get wrong, what you are, or what exactly is causing that thing. Now it is more about you than it is about the market. That is one thing you need to know. It is more about you. So you need to study yourself when you are facing loss. Stop trying to push the responsibility on the market. Stop trying to say market manipulation. It is not going to help you to discover that thing that you are missing out. So it is very essential that when you are having losing streak, it happens to all traders. Myself, I don't chop my own loss, and it is still going to come. I'm not expecting it to go away. That is the funny thing, because you gain, you lose, but your emotional intelligence is what will help you during the time of loss and will help you to maximize your profit and minimize your loss. Do you understand? So you just have to sit down, get yourself discovered, and that is it. Bye guys.